Hello everyone, welcome back to my YouTube channel. Today's video is very important and very much requested video. The reason is everybody want to understand vintage analysis. So many of you have been commenting that Rajat, why don't you take us through the complete video where you are explaining us what is vintage analysis. So today we are going to crack upon the vintage analysis topic and we'll understand using a simple example. Then we'll try to understand a complex example of banking. And then in the end, I will explain you a whole Python code which will be directed all of you towards how we do vintage analysis. So in the end, you will be able to understand with a real-time Python code, and the output also I will show you in terms of graph that what exactly this is. Okay. So this is a background about today's video. Now, without wasting any time, let's move forward. So as we said, the topic is going to be vintage analysis. Now, primarily, to understand vintage analysis, this is important that all of you know that vintage analysis does not always belong to only the scorecards in banking. Anything you are comparing apple to apple comparison, that can be called as a vintage analysis. Okay. So if I say in the layman language, especially from the credit risk perspective, so that vintage analysis is the technique to monitor portfolios. Now, what are those portfolio? Those portfolio can be anything. For example, your loan portfolios, your credit card portfolios. These are two examples from bank. Now, in layman language, when you monitor portfolio, for example, you are monitoring a batch of students. And next year again, you monitor a batch of students. So these are two different batches. Let's say 2025 batch and 2026 batch. This is one cohort. This is another cohort. Similarly, in loan also, there would be loan on different timelines, right? Some loan you disburse in January, some in February, some in March. This is month on month comparison. Also, you can do a comparison on the basis of quarter on quarter. So anything can be considered as a cohort. Now, vintage analysis always talks about the monitoring of a portfolio. Okay. And why we do that? Because we want to understand that if there is anything changing in the data or any operational change, any business change, how exactly this impact us. Okay. Now, let's take an example. So, monitor portfolio is something you need to remember. Why we do vintage analysis? To monitor any portfolio. Now, let's take one example, one easy one. So example number 1. Now in example number 1, there is a college, for example, College of Engineering, Roorkee. Okay. Now this college have so many batches. So we are considering there are 3 batches. Let's say 2012, 2013, 2014. So every year there are engineering graduates getting passed from this college. Now there is a company which constantly comes to this college for placement. For example, I take the name of Infosys. Now when Infosys comes to the college, they hire people. Okay. So every year they are hiring students. So every year the number of hired students is obviously would be changing. It's not fixed, right? Students hire, for example, in 2012, they hired 200 students. 2013, they hired 100. 2014, they hired 40. This kind of trend you would have been always noticing in so many different parts of your life, in colleges and in your offices also. Okay. Now just you can you see, can you just focus on one thing, that the number is gradually dropping here. Now, if I make a graph of this, okay. So this is 2012. This is 2013, this is 2014. These are your student placement record. So if you see the count, 200, then 100, then 40. So there is a decline here. This sharp decline is noticed by your placement officer. Every college have a placement head. Now that placement head will see that there is a decline in our college placement graph. So we need to do something around it. Now every student, if they go, that is going to take a lot of time, right? So what they will examine on the basis of the batches. They will compare 2012 with 13 and 13 with 14 and vice versa. Each batch they will compare with each other. Now what they will think, there can be so many reasons that this drop is happening, right? So there can be so many questions will come to their mind. So what are those questions will be? students quality, whether the student quality is decreasing. Student quality. So earlier there were some good students coming to our colleges, high rank, top rank students were taking admission. Now they are not taking. This is very common one. Then obviously sometime there is a shift in job market, overall global impact on the market. So job market also changed, that Infosys is not hiring students from this college, not only this college, but from different other colleges also. So there can be a job shift in the market. And third one, can you think of anything? Just put it in the comment, okay? The third one is college teaching standards are not high, okay? So teaching standards or the quality of teachers decreased. Anything can be the reason, right? The students' quality is not good, or the job market gradually is changing so that the company is not hiring from any college, or the teacher's quality is eventually not good. That's why our students are not able to crack the exam of the company and they are not able to get hired. Anything can be possible. But because of this analysis, now this placement officer, this head have got a reference point that in which year this started falling. So they can analyze all those years. Okay. Now each batch is considered as a vintage. So now you understand vintage. Okay. I hope this is clear. Vintage is 2012 is a vintage. 2013 is a vintage. 2014 is a vintage. Now each of them is also known as cohort. That's why this is known as vintage analysis, cohort analysis. So don't get confused. We are talking about the same thing eventually. Okay. Now this is one example from the college. Now you come to the real life scenario. Example number 2 is about a bank. So there is a bank. The bank has a portfolio where they are giving loans. So for example, they are offering auto loans. Auto loans is like your vehicles, cars and trucks and all of that are part of auto loans. Okay. Now they have 3 months of data. For example, I say they have January 2026, they have February 2026, then they have March 2026. So this is a 3-month data in the bank. They are giving loans, auto loans specifically to be precise. Now for each of these months, I will try to make some bucketing, DPD. I will try to catch the day past due. What is day past due? It's a very important concept you need to understand. But first let me write it so that you will be checking how many customer are 90 plus DPD. So you will make a table here. This is your 90 plus DPD in Jan, Feb and March. You will write that count here or the percentage, whatever your team is calculating. Now you will check 180 plus DPD. That is 6 month past due customer that they are not paying the EMI from last 6 months. So DPD means day past due eventually. 90 plus DPD means the customer who have not paid the amount for 90 days. 180 means 180 days. 360 means 360 days. Now this is 360 DPD. So how many customer in this portfolio, auto loan portfolio, are not paying the EMI from 90 days? That means 3 months, then 6 months, then 12 months. So this is understood. Now, if I have a percentage, let's say in January it was 1%, in February it was 2%, in March it was 3%. So March has an increased number. Similarly, you have 2%, 4%, again 6%. 180 day DPD also are more in the March cohort. Okay, then you have again 4%, 7%, or let's say 10%. Now, what is one thing you are analyzing here? The most important concept you should remember on this is that there is a issue with this cohort. There is an issue. So when bank will understand this issue, you will clearly, you may have to clearly rectify the reason for the bank. Bank will not be doing it just by themselves, right? The leader will not come and they'll not do it. You only need to do it. So now for you, you understood that there is an issue with this cohort. Okay. Now you are the part of risk management team. So in bank, risk management team usually take care of all these. Now you're part of the risk management team. You understood March have a issue. You notified your managers, everybody. That's what you do. But you need to figure out the way that why, what is the reason of this. Okay. Eventually the ways, the same thing we did in the college student thing. We need to ask certain question. Now here itself also, we will ask certain question. Those are very important. So we need to ask those questions now. So for example, the first thing you will understand. So the question in the case of bank will be that is there a change in the underwriting process? Is there a change in underwriting? For those of you who don't know what is underwriting, that means there is a process, there is a policy team which sits, they check the documentation, they do underwriting, and on the basis of that, the loan is getting disbursed. So is there an issue with the underwriting, or we can say policy? So this is question number one you can ask, obviously. This will come to your mind as an analyst. Then the second thing, you will check if the score has changed. That means now you're giving loan to the less score people also. The case which happened with Lehman Brothers, they give the loan to those people, home loans in that case, obviously, that they were not able to pay the amount. Now, in this case, you will check that if a score has changed. What else you will check? You will check if the customer mix has changed. That means earlier customers were several types. For example, some government job. Then there were some private job. Then you have self-employed. Now let's say in March you analyze that the most of the customer who got the loan, they are self-employed. Now you understand there is an issue with the self-employed people. So you will ask obviously that is there a shift in the customer mix? Then you will check fourth question. You can ask that if there is a change in the economy of that country. For example, any war is happening, any sudden changes in the crude oil price and this and that. So many different factors comes, macroeconomic and geographical and geopolitical questions. So all those things are part of the economy. You need to check those reasons also. And the most common one of the most common one, not the exactly most common, is the operational reason. Is there any change in the internal process which is causing that these March people got some loans which they should not have got? Okay. So this is very important question. These are those questions which you're going to ask. Okay. Now look at the concept clearly. Customer who took the loans in the month of March. If you look at the data, so the customer who took the loan in the month of March are defaulting much faster. That is the precise clarity we got from this example. Would you immediately say that March customer are the bad borrowers? It doesn't work like that in bank. You cannot directly say that. You need to ask all these questions before moving towards that conclusion. You need to figure out what has been changed. What changed? This is the reason we are doing all this vintage analysis. This tells us, this gives us a data point that where we have to dig in. Now, it doesn't mean that what exactly what exactly has changed, you will get the answer on the spot, but it will give you a direction that where you need to figure out. Okay. Now, what actually the vintage analysis has told us? Let me summarize that. The most important thing to remember, vintage analysis does not tell why default is increasing. Instead, vintage analysis tells us exactly where and when we should start the investigation. Okay. Without the vintage analysis, the bank may only see that overall portfolio rate, for example, is like 5% default rate. Now that's a useful information, but it doesn't answer the most important question, which batch of the customer caused this increase. So vintage analysis pinpoints the exact vintage where the performance started decreasing or deteriorating. Okay. Now let's move on to the Python code and understand in real life scenario how this works. Now let's go to the Python code. Now here is our Python code, and all of you guys can download this Python code from the description box. Make sure you access my GitHub repository so you will be able to download this code. Now let me give you a brief of the example we are going to discuss now. So there are three batches. Just assume 22, 23, 24. There are 3 years of engineering batches. They are getting passed out. Now each student have a placement month. So that placement month tells us that how many months from graduation they got placed. If a student have not got placed, we will represent it with a missing value, will not applicable, something that we will consider in this code. Our objective is to calculate the cumulative percentage for each batch month by month. I think group by will be on the basis of the first batch and then month by month. So for this example, after 1 month, what percentage of student from 2022 batch has been placed? Then how many placed after 2 months, after 3 months? So on up to 12 month, we'll repeat the same process for each of these batch. Okay. Finally, we will create a vintage analysis table and line chart so that we can directly compare the cohorts. So this is clear. This is the overall example we are going to talk now. Okay. Now let's understand. Come back to the code thing. So now first thing, I will import the pandas library. Then I'm importing numpy, matplotlib. These are the most important library you should understand. So now let me run this piece of code. So my library has been declared in the backend. Now in the second step, what I'm checking, I am creating the data on the basis of the each year. So there are 3 batches, 22, 23, 24. Then the placement month for those respective batches. I have prepared this database. Now this is a small database. Obviously in real world, you will be running on a big database in your company. So let's run this. My data is also ready now. Now let's represent this data to run so that you can see this. Now this is the form of the data. Student ID, batch and placement month. So you can see how many got placed. There is one customer in your, so there are one, not customer, it's a student. So there is a student who has not got the placement. You can see that. Now what I'm doing, I'm just assigning a kind of a trigger or a kind of a flag that who are placed, give them a new column placed and it should be 1 for them. Okay. So I just ran this code. You can see student ID 1 in the only the last student ID, it should be 0. You can see that. Now you have a rough database ready. Students flags are done. Now we want to track placement for the 12 month as we said. So we are giving a maximum month. We are creating this variable. Now this is something we are creating a empty data frame only for the vintage analysis here. Now I will run this. This will create a empty data frame here. So you can see there's nothing has been print, right? So it's an empty data frame. Now here comes the main logic. So as I said, this part I already done. Okay. So you can see from there. Loop. So now for the batch, okay, we will check only unique values. Then filter out the customer belongs to the current batch. Then total students in that particular batch. Then list of store cumulative placement percentage. Okay, we are using length function for the total count. Then I'm just giving a loop. We are using the range function here again, and we are increasing the max month by 1 so that is the counter will be increased. And then I will just count the student placement before the current month. Now calculate cumulative percentages here. Okay. So for cumulative percentage, you can see I am giving a round off also, round off formula I am using here. Then store the percentage using the append function. Simple. And then what I'm doing, I'm just saving this in where, in which data frame. This is something I created, right? So you can see that now this has been saved. So set the new row label just to give you a kind of a idea that how the data will look, because this is kind of a labeling. This is not mandatory, something which you need to do. So that is your choice. Okay. You can give the name as per your convenience. And then I will just print this. Now I click anywhere in the cell and run this. So you can see that for each year, there is a cohort. Okay. How many student got placed in first month, how many in second month, you can see that. Now I have the data, I have the cohorts ready. Now I'll simply plot it using the plot function. So I'll just run this. So now all of you can see that I do have the vintage analysis ready for the each batch. Okay. Now you can see how on x-axis we have month after graduation. Here we have the cumulative percentage. So you can see which batch has the highest cumulative percentage. Simple. Now you can simply color it also on. So that's your choice. Okay. You got a what? Heat map kind of structure, right? Now see this. The more darker it's getting, the more good for you to understand the data. So from the light, you can see it's from white, green, greener, dark green and all, right? Now on that note, I hope this is clear to all of you that vintage analysis, how this works. Guys, this code is there in my GitHub repository. Make sure you download from the description box. Have any comment, have any question, please put it in the comment section. I reply to this. But I would do one request. I want each one of you to share this video with at least 2 friends of you so that I can get better reach and I can make more crazy videos like this. Okay. I hope we are good with this. And if you have any question, please put it in the comment section. Now, I hope all of you are clear what is vintage analysis, and all the best to you for your next interview. Thank you so much. Please subscribe to my channel.